I could see, yes, the cycle shifting from financialization into hard assets. And yes, it hasn't been plain sailing. There are ups and downs, but I still believe in that. And one of the symptoms of that it's happening is the bear market in bonds, government bonds, corporate bonds, all kinds of bonds, because the 40 years of bull market in credit and bonds from the early 80s until 2021 is over. And we're going to continue to see higher yields. And yes, financialization credit is not going to be as easy. And I think the Chinese, they think very long term, and they realize that. They don't think like Western leaders or politicians or countries that think like in the next month or the next year. China thinks in 10, 15, 50 year, they think 50 years ahead, the Chinese. And I think, it's one of the reasons why, not just with gold, but with all other, loads of other, commodities. They're not just the largest producers of those commodities. They're also the largest importer. Yes, granted, their economy is big and they need a lot of these natural resources. They still, developing a lot, but I also think, yes, they're hoarding for the future. And unfortunately, in the West, especially Western Europe, we don't have that much natural resources. And even if we had, we probably wouldn't be like producing as much because we have a leadership that's, has been inculcated with this climate change, scam, really. And also, geopolitically, Western Europe has not, they've not had good relationships with a country that is very near to Europe, that has loads of natural resources, that's Russia, of course. We kind of, closed the door on Russia's, energy. The U.S. is a different story, but I think the U.S., needs to, start producing again its natural resources. There's been a lot of dependency on China because China, for rare earths, for example, it's it produces and imports a lot of rare earths. We're dependent on China for that. Yes, President Trump has signed or has, in the past, in the beginning of his second term, signed a lot of, executive orders to make sure that starts, but it takes time. Explore a possible property that has all these natural resources. It takes time to do the drilling. It takes a lot of investment.
Here's the paradox. China isn't just resource poor and playing catch up through imports. It's simultaneously the world's biggest producer of gold, coal, copper, aluminum, steel, nickel, and rare earths, and still the largest importer of nearly all of them at the same time. Record-breaking domestic output still can't keep up with demand coming from investment, jewelry, refining, and state reserves. This pattern shows up across the entire resource map, and it points to something bigger than plain industrial need, a long-term accumulation strategy. The West, still dependent on Chinese rare earths despite recent policy efforts, has been slow to respond.
So the U.S. is way behind, and at the same time, China is competing by buying a lot of mines and deposits outside China because it's also the largest importer. So we're going to look at the gold story, of course, and before I do, I'd just like to ask you to make sure that you subscribe if you haven't, and also to make sure that you hit the notification bell to be notified of all my new videos. And I'd like to thank all of you who have been long-term subscribers and supporters of the channel. Yeah, I appreciate it. So here's the story. It came out on the 24th. So on Friday, China's gold imports surge after international prices slump. I'm going to go through the Bloomberg article here for you guys. It says Chinese gold imports rose to a 2-year high in June, underscoring resilient demand in the world's biggest bullion market after a plunge in international prices. Overseas purchases rose a third month to about 173 tons, according to the latest customs data, the highest mark since March 2024. Cheaper prices and a stronger yuan kept investors interested, while banks were motivated to use up import quotas and stock up on bullion to meet retail commitments. Investors buying the dip is an important driver of recent demand, said Ji Wu, an analyst at Jinrui Futures Company. He said commercial banks need to build up their inventories to provide the physical backing for the retail bullion sales and gold accumulation plans, as well as preserving some safety reserve for when demand spikes. So here's the chart. This chart is interesting. China gold imports stay elevated in the first half while prices slump. You can see there 2026. It's the highest with the exception of 2024, it's the highest it's been up until from January to June since 2021. I recommend you watch an interview I posted this Saturday. I interviewed Eric Young from Hong Kong, aka King Kong 5888. And I'll put it up here. And we spoke about this July 24th deadline for retail accounts moving away from the Shanghai Gold Exchange.
The numbers back this up. Chinese gold imports hit around 173 tons in June 2026, a 2-year high and the third consecutive monthly increase, as falling global prices and a stronger yuan drew buyers in. First half imports for the year reached roughly 820 tons, a huge jump over 2025. Commercial banks used the price dip to restock their import quotas and rebuild bullion reserves for retail gold accumulation programs. Meanwhile, China's official reserves have grown for 20 straight months, now sitting around 2,346 tons, though many independent researchers believe the real state-controlled total, once opaque holdings are factored in, is considerably higher.
I see a lot of people out there saying that retail has been banned from trading derivatives of gold, and that's not true. And that's why I recommend you watch that interview, because Eric he's got 1 foot in Hong Kong and 1 foot in China, and he knows the language, he knows what he's talking about. But in a nutshell, by retail, the Chinese mean smaller and medium-sized enterprises that trade through the Shanghai Gold Exchange. They're going to have to trade the forward contracts now from the Shanghai Futures Exchange or the Hong Kong futures market. And it doesn't mean to say that retail can't trade futures anymore, but at the same time, the Chinese are getting ready for using gold as a reserve asset, physical gold. They want to strengthen the physical gold market, not just in the Shanghai Gold Exchange, but also in the new Hong Kong, the new Hong Kong bullion market. As for the PBOC, yes, it bought quite a bit in June. We're going to have to wait to August to find out what they bought in July. Yet there's a lot of speculation that the PBOC has a lot more gold than it professes to have, the 2,300 odd tons that it says it has. There have been a lot of people like Alistair McLeod, Dominic Frisby, and many others who have looked through the numbers over the years. And they deduct that the Chinese government, maybe not the PBOC on its own, but the Chinese government controls or has a lot more than 2,300 tons. So that's how we need to put it. So I've had a look here. Yet China, believe it or not, is also the biggest producer of gold in the world, according to the latest data. Has an annual production of almost 400 tons. And at the same time, it's also the largest importer of gold because of investment demand, jewelry, central bank purchases, and refinery needs. They exceed domestic mine output. So, yeah, it's pretty amazing. The same thing goes for coal. It's the largest producer of coal, also the largest importer. Copper, same situation. Aluminium or aluminum, as Americans would say it. Steel, nickel, rare earths, even tungsten as well. They produce most of the tungsten in the world, like 80%, and they're also the biggest importer. Unfortunately, we're way behind in the West, and we need to put our skates on if we're going to compete with China. And of course, the other biggest source of natural resources, aside from the United States and China, would be Russia. But that's going to be a bit trickier right now because NATO basically is at war with Russia. The other thing, the other country I can think of that has a lot of natural resources is Brazil. And I think that's something to keep in mind going forward as well. Brazil.
Recent changes to China's gold trading rules caused some confusion overseas, with claims circulating that retail investors had been banned from gold derivatives altogether. The reality is narrower. Smaller trading accounts are simply being redirected from the Shanghai Gold Exchange toward futures markets in Shanghai and Hong Kong. The bigger takeaway isn't restriction, it's reinforcement. Beijing is deliberately building up its physical bullion infrastructure, including a growing Hong Kong bullion market, positioning gold as a serious reserve asset rather than a speculative afterthought. It's a structural move, not a pullback, one aimed at tightening China's grip on physical gold rather than paper claims on it.
The oil price has come off. It looks like the United States and Iran have stopped the hostilities, and in the Strait of Hormuz, I'm not sure whether the oil is really flowing that much there. I mean, would you, if you owned a shipping company, say right now, okay, everything's fine, we let's start working in that area? I would be concerned because things seem to change. Whenever the stock markets and the bond markets get a little bit out of control for Mr. Besant and for Mr. Trump, it seems like that's the way things are trading. We saw last week bond markets, bond yields reach almost 18-year highs. They were starting to break out, like the 10-year yield at 4.7. The 30-year was starting to really accelerate towards 520, and lo and behold, we get this deal. So how long is that going to last? How much does the U.S. really need to give in to Iran's demands if it wants things to get back to normal? And we're fast approaching the election season for the midterms. Well, we kind of almost are there already. Financially as well for the U.S., this could be a huge blunder because prior to this war starting, the Strait of Hormuz was free for everyone. It was free passage. There's a part of it, I guess, that's international waters. The Iranians and the Omanis didn't charge anything. But now, because of this war, I think it's going to be the new thing. I saw that the foreign minister of Iran actually said, well, a lot of these waterways around the world, like the Panama Canal, the Suez Canal, the Bosphorus, the channel Bosphorus to the Black Sea, and others, ships are charged to go through them. So he's now saying, why shouldn't Iran and Oman charge for people to sail through the Strait of Hormuz? But that wouldn't have been on people's mind and on his mind if this war hadn't started. I think it's a huge, it's another nail in the coffin of the petrodollar. And I think that's the other reason why the Chinese are buying so much gold. And they're telling their people also to buy a lot of gold. But also the Chinese people, it's in their DNA to have gold. And that's why they're rushing still to buy so much gold. While we in the West give up our gold. And our gold is flowing east. And why is that happening? Well, because the powers that be, the people that control the West, they don't want you sovereign and independent financially. And that's why they manipulate the paper price, which is a gift to China. What is oil doing this morning? Let's quickly have a look before I wrap up. Well, Brent crude, the futures, the September crude is back below 100. It traded up above 100 back on Thursday and Friday. And we're now at 91, well, we're around 92. The low's been 90. The WTI crude, that got up to 93 on Thursday. It's now at 83.60, so a $10 swing. But as I've said before, and I have to thank Peter Carlin, because he told me about this over 2 weeks ago, that we need to keep an eye on diesel and jet fuel, because the refiners in the U.S., they need sour crude to produce diesel and jet fuel. And the situation might have calmed down right now in the Gulf, but there's not much time until the strategic petroleum reserves of sour crude are depleted. Very important, of course, diesel and jet fuel, not just to the U.S. economy, but the world economy. What about how's gold? How are gold and silver doing this morning? Well, gold traded up above 4,100. High was 4,116. Right now we're at 4,088. It's up about $35, the spot price. It's 20 to 7 a.m. London time. Silver as well traded above 60. 60.11 was the high. Right now it's up $1 at 59.30. Yeah, and the stock market, the Dow futures up 0.75%. S&P is up 7/8, and the Nasdaq 100 futures up 1.5%. Yes, and Treasury yields have come off a little bit. The 10-year yield is down 5 basis points at 4.63. The 30-year is at 5.12. It's down 4 basis points. And I can bet you that after the market closed on Friday, Treasury Secretary Scott Bessent went to, well, I'm speculating, but I think there's a good chance he went into the Oval Office and told President Trump that they need to cease hostilities because the markets were getting out of hand. And by the markets, he meant the Treasury market. And I just wanted to show you something, because Kevin Warsh was supposed to be Mr. Hawk, right? And they also have a meeting this week, FOMC. There's talk that They might raise rates, but look at this is QE here. This is the total amount of Fed assets since a year ago. Well, is that going down? No, it's been rising since the beginning of December, and Kevin Warsh is continuing to do QE. So when they tell you he's a hawk, don't believe him. Yeah, and I'm going to keep stacking. I think the Chinese know something that most of us in the West don't.